Moving on now to Chapter 17 about auditors' reports, the different kinds of reports. Okay, we have looked at the auditing process. We have talked about the auditing profession. We have also looked at how to get an understanding of internal control. We looked at actual components of the audit, sections of the balance sheet in the second section, and liabilities and equity. We also talked about indirect and direct confirmations of income statement accounts. We're now moving to the final part, issuing the reports. After completion of audits, it's about issuing the reports. Once again, a quick review. Management is primarily responsible for effectiveness of the internal control and fair presentation. And you, the auditor, your primary responsibility is to express an opinion based on your findings. Okay, so far we have looked at obtaining engagements, planning for the engagement, evaluation of internal controls, the substantive procedures, and then finally reporting. As I told you, there's three sections, the first section of the class, second section, and then the third section. Okay, now we learned in Chapter 2 that the standard report is the unmodified report that majority of your clients are given based on the work that you have done. Hopefully everything was okay and you decided to issue an unmodified, or what we call a clean report, which states that the financial statements are presented in conformity with GAAP, the audit was performed in accordance with GAAP, and there were no scope limitations. Okay, we studied these reports in Chapter 2. We had reports for the public companies and the non-public companies. Now let us review the two reports again quickly to refresh our memories, and they are on pages 580 and 582 of your textbook. So 580 and 582, let's take a look. Of course, here's page 580 from your textbook. This is 580. For non-public clients, okay, and then on 582 for public clients. You should review these reports just to refresh your memory from Chapter 2. Okay, those are the standard reports. But this chapter, we're going to talk about those situations, the unforeseen, unavoidable, or unfortunate situations when you have to issue other reports. Okay, many times it is unfortunate, many times it is not. It's just a question of necessity. Okay, and this chapter we're going to talk about those other reports. What are those other reports? The qualified reports, disclaimers, and the adverse reports. So this chapter is about understanding those circumstances when auditors cannot issue clean reports. Circumstances when the standard report is not issued are not common. Okay, hopefully by end of every audit things do get resolved. But if there are material deficiencies, limitations, and other such conditions, we may have to look at other kinds of reports. Okay, so in addition to the standard report, there are three other kinds of reports. And they are unmodified report with emphasis of matter paragraph, emphasis of matter for going concern, and lack of consistent application of accounting principles. First, I'd like you to read this three. Okay, I'd stop the lecture here and read this three. What kind of things do get emphasized? If company has a going concern issue, you are not sure if the company will be in existence. Emphasis of matter. Okay. The company is changing accounting principles from LIFO to FIFO or something else for revenue recognition. You're not consistently applying. Emphasis of matter. Any kinds of other risks or uncertainties. Okay. Related party transactions. Component of a large business enterprise. All these issues or matters affecting comparability are areas where things need to be emphasized. That's when you need to work on an emphasis of matter paragraph. Okay? Emphasis of matter normally follows the opinion paragraph. Okay? So that's emphasis of matter. The second one is an unmodified opinion with an other matter paragraph. Let's look at this real quick. Anything that adds to the auditor, to the user's understanding that the auditor feels relevant, usually follows the opinion paragraph, would go in this particular paragraph. Okay? Reporting is very important because when there are lawsuits, the questions or the areas of disclosure do come into play. All right, that's why you have these PPC libraries and all these, online libraries with standard reports to reduce legal liabilities. Okay. The third one is unmodified opinion on group financial statements. When two or more CPA firms are involved in the audit of financials, responsibility has to be divided. Then such a report is issued. Report does not include emphasis of matter or other matter paragraph. So what are we talking about? First, you need to obtain understanding. What understanding? This. Competence, whether the other auditors are competent, the extent of them being involved, whether they will be in a group engagement, the team will be able to obtain necessary information for consolidation, and whether component auditors operate in a regulatory environment, for example, for overseas auditors. Okay, so you need to obtain an understanding of that first, and then you have to communicate with component auditors. You communicate with component auditors about how their work will be used, the ethical requirements. You provide list of related parties and communicate significant risks of misstatement. Okay, because they need to know that you are relying on their work as well when you are doing this group audit. Okay, but the group auditors can decide whether they wish to refer to the work of component auditors or they want to assume responsibility themselves. If additional procedures are necessary if group auditors decide not to refer. What I meant is if they are going to assume full responsibility, then they need to do additional work at the end of the day to get the kind of confidence, AR equals IR times CR times DR. Get that confidence that everything is within acceptable range, the risks involved. Okay. Now, the three levels of the component. When the nature of the component is not significant, what procedures should you adopt? When it is significant, what procedures you should adopt? And significant because it is likely to include risk of material misstatements. You may have to do an audit itself. Okay. So different stages of components or different levels of component require different kind of work for a component audit. So those things are important for a group audit. You'll see a few multiple choice questions as to the level of work that may be required. Okay. Now, you want to review this as well. Let's review this real quick. Emphasis of matter in areas of group audits and effect on the audit report if the matter is improperly presented. Okay. And you need to review this to make sure that what kind of situations lead to what kind of emphasis. Going concern, consistency, auditors, discretionary judgment or decision as to emphasize certain matters. Unmodified opinion with an emphasis paragraph. Effect on audit report if the matter is properly presented. Okay. A big going concern could lead to a disclaimer of opinion. We'll talk about that briefly. Depends on the effect that it can have or how big that is. Effect on audit report if the matter is improperly presented. It could have a grab departure and it could lead to either a qualified or an adverse opinion. Okay, and that's what we're going to look at in the next section. So let's take a look at the modified reports. We talked about unmodified reports and emphasis of matter. Now let's look at modified reports or what we call the qualified reports. Two situations. Misstatements due to departures from GAAP. The financial statements are materially misstated or not enough information. Pervasive or widespread versus non-pervasive issues and reports issued in these circumstances are listed below. Departure from GAAP and a scope limitation has different effects. Okay, I would want you to review this very carefully. Not material, unmodified. Material, not pervasive, qualified. Material and pervasive, adverse. For gap departures, here disclaimer if you are not able to obtain sufficient information. Okay, the extent to which it can have an effect on the user's judgment or how much the user can rely on makes a big difference as to the kind of report you may be able to issue. Unqualified opinion states that financial statements are presented fairly in conformity with GAAP except for certain situations. Okay? The problems while material do not overshadow the overall fairness of the statements. Here's an example. Introductory and scope paragraph do not change. In the opinion paragraph, you have added readings except for. And again, these things need to be read and need to be understood by doing more and more practice. Okay? Scope limitation qualified opinion. To the extent where it is not that big, the scope limitation, you can give qualified. It is material but not pervasive. Okay? So, introductory paragraph is standard. Except as discussed in the following paragraph, we conducted our audit. Okay? And then, in our opinion, except for the effects of such adjustments, if any. Okay? So you can see, in the first case, gap departure, introductory and scope paragraph are standard. In the second case, introductory paragraph is standard. Alright? And then you have your adverse opinion. So let's look at this. An adverse opinion states that the financial statements are not presented fairly. Okay? You clearly know that to be the case. You decide to provide an adverse opinion. Usually when management integrity is in doubt, those kind of situations would lead to that kind of opinions. Here's what comes in the opinion paragraph. Okay? Again, you will have to read this so that you understand what is being put in there. But the objective of this particular lecture is to make sure you understand what reports are issued in addition to the unmodified. So you have adverse because you know that it is misleading. In many cases, you do not have enough information to make that decision. So let's take a look at that situation. Is the scope limitation small enough that a qualified except for can be issued, or a disclaimer will have to be issued? Is a decision you have to make. Of course, you would want to do alternative procedures first because you always want to issue a clean report if you can without compromising on certain things. Okay, you may have to charge more to do more work, but if you can give a clean report based on the work you have done and to the extent where you gain that much confidence, you should. If you don't have a choice, that's when you have to look at those other situations. Qualified opinion is appropriate. The report will include a basis for modification. Okay? Material, but not pervasive. Let's take a look at this. Both material and pervasive, a disclaimer is appropriate. Okay? And then here are the 3 paragraphs for that one. So when the impact is huge, it's a disclaimer. Okay? Of course, you know something is wrong, you need to state it is wrong. You cannot substitute a disclaimer for an adverse. I like the guy, I just don't think that he has done work properly, and there are material misstatements. Well, then you need to disclose that. Okay, you cannot just say, because I like him, I'm just going to disclaim. No, it's not a substitute. Okay, so few multiple choice questions on additional paragraphs before opinion paragraphs, following opinion paragraphs. Okay, you will see a few multiple choice questions on this, so you need to know this clearly. Okay, Split opinion. Unqualified or unmodified on one statement while expressing a qualified or adverse on the other. Can happen. I had this situation. I was retained after the year ended. I could not confirm the ending inventory. I did not see them, so I had to qualify. Other than that, it was a split opinion. Everything was okay. All right, so that's what you call a split opinion. Then you have comparative financial statements. Rules that you need to be careful about when comparative financial statements are issued, especially if the prior year were done by another CPA. Okay? Now, one thing I would like to make sure is the date of the prior report, including the disclosure that they were audited by predecessor auditors, is important for comparative financial statements. The reason why I stress this is because you may see a few multiple choice questions on that. Okay, and here is a quick review of material and pervasive, what situations yield unmodified reports, and what situations would need modification. Okay, that's a quick overview of chapter 17, and the final chapter is going to be chapter 3.